Good morning. I'm Joe Brusuela, Senior Economist at Bloomberg LP, with your Bloomberg Economic Brief Morning Cup of Joe. Okay, so it's GDP day. We're going to get that first estimate of Q1 2012 gross domestic product. Now, the growth picture improved noticeably during the first 3 months of the year due to a sustained increase in capital expenditures, an unexpected rebound in defense spending, and of course, a strong increase in overall personal consumption expenditures. Now, while the growth will likely decelerate from a 3% quarter-over-quarter annualized pace or a 1.6% year-over-year pace recorded during the fourth quarter of 2011, the composition of the growth that we saw will likely be superior in many respects to the final 3 months of last year. Now, according to a Bloomberg survey of economists, they do expect to see growth come in at or near 2.5%. Now, that's in line with the long-term growth trend of the United States economy. Now, the important thing here is that the quality of growth stands in stark contrast to the $52 billion in inventory building that accounted for roughly two-thirds of all growth during the final quarter of 2011. So that is a noticeable and healthy improvement. Now, the primary driver of this growth is likely to be the increase in consumer spending, which was driven by a pent-up demand for durable goods and very strong retail sales. Personal consumption expenditures are likely to expand at a 2.3% rate, which should translate to roughly 1.7 percentage points to growth. Now, this should result in a final retail sales number of roughly 2.1%, which is up from the 1.1% posted again during the final 3 months of 2011. So just taking a step back and looking at sort of the composition of growth here, it's a much better number, and it's likely to be a more healthier number. Now, once you dig deeper into the report here, there are risks, and they do tend to run in different directions. If we have an above consensus print, say 3%, I do fear that that will be due to another one of these quarters where inventory building got out ahead of where consumption is. Now, we did see some very strong inventory numbers in February. Remember, we don't have the March numbers yet. The first crack at advanced GDP is always done on an incomplete set of data. To the extent that there's some downside risk, it comes in the trade data. Now, to be perfectly blunt here, what saved Q1 GDP was a strong swing in trade. The narrowing of the trade deficit in February added 0.5% to overall estimates of growth. Now, I do suspect that some of the internals in the trade data will be brought back, specifically having to do with the rise in oil prices. I expect when all is said and done and we get the final estimate, growth should be right around 2.4%. I'm Joe Brusuelas, and that's your Bloomberg Economic Brief Morning Cup of Joe.